Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that's been doing really well in the market recently, and that stock is Chevron. We can see that over the last year, Chevron is down 12% while the rest of the market is up 3%. So over the last year, their stock is underperforming the market at the moment. But we're going to see by looking at some of the recent news and their financial statements why Chevron's company is actually doing really well right now. And so right here in this article, it's titled Exxon and Chevron Split Over How to Manage Rising Cash Piles. And they point out right here that the top oil producers differ over how much to hold in reserves in terms of their cash on their balance sheet. They have a lot of cash hitting lofty levels, but Chevron says it's inefficient to leave too much on the balance sheet. And all this cash came from the booming oil and gas operations that happened over the last year or so. But both of these companies are split over what to do next. Exxon's net hit 11.4 billion, their net profit, while Chevron earned 6.6 billion in the first quarter, and they're expected to continue to have strong results through the rest of the year. They paid down a lot of debt incurred during the pandemic with all of the new cash inflow that they recently had, and they have pretty pristine balance sheets. They're also spending well below their past levels on new exploration and development projects. They both have low debt-to-capital ratios of around 4%, which are a fraction of the double-digit ratios they had a few years ago. They've both cut spending on new projects to less than half their income, and as a result, they have huge cash reserves far in excess of what they need for routine operations. Wall Street has been pushing for higher share buybacks and dividends because they're worried that too much cash could signal a big dollar acquisition that might not lead to increased value for shareholders. Exxon was sitting on $32.6 billion of cash at the end of the first quarter, and Chevron had $15.7 billion. So they don't really know what to do with all of this cash at the moment. They're basically saying that they don't want to keep it on the balance sheet, and this cash belongs to shareholders, so they're trying to figure out how they could allocate this capital best and most effectively to return value back to Chevron shareholders. Then right here, these are their financial statements. I'm going to look at their income statement, their balance sheet, and their cash flow statement. We can see that year over year, total revenue declined from $54 billion to $50 billion for the first quarter. We can see that net income increased from $6.2 billion to about $6.6 billion year over year, just as the article had pointed out. Then right here on their balance sheet, we can see from December 31st to March 31st, total assets are down from 257 billion to 255 billion. Most of their business is financed by equity. They have $159 billion of equity, and of that, they have $193 billion of retained earnings, which is up from 190 billion year over year, or from their prior period. And then right here, this is their cash flow statement. We can see operating cash flow decreased from 8 billion to 7.2 billion. And they also have a lot of value returned to shareholders here. $2.8 billion of dividends paid out in the first quarter and $3.6 billion of share repurchases. So basically about a little over $6 billion returned to shareholders. So that is definitely a lot of capital returned to shareholders over the last 3 months. So right here, this is a discounted cash flow model. Yahoo Finance is estimating that the company is going to grow at basically, or not even grow. They're estimating that it's going to decline at -7% over the next 5 years. They had $38 billion of free cash flow in 2022, $7 billion net debt position, and 1.8 billion shares outstanding. That estimates their intrinsic value per share at $146 per share, which means that they're currently trading above their intrinsic value per share at $156 per share based on these Yahoo Finance estimates. Then right here, for their competitor analysis, I compared them to ExxonMobil and ConocoPhillips. We can see that they pretty much have one of the lowest profit margins out of the three companies, and then they also have the highest P ratio and the second highest dividend yield right here. So they're pretty competitive. I would say they're about middling of the pack across their dividend yield and profit margins. It looks like best profit margins go to ConocoPhillips and best dividend would go to ExxonMobil. Then lastly, enough of the video, I wanted to compare them to other companies we've looked at in past videos. In terms of share price to intrinsic value, Chevron is basically trading pretty well. They're trading at 1.07 times their estimated intrinsic value here, but they're not trading below intrinsic value. Google, General Electric, and ConocoPhillips are the only 3 companies on the list currently trading below intrinsic value per share. They had an estimated growth rate of -7% per year, which was good enough to knock off ExxonMobil from last video, which was trading at or had a growth rate of -10%. But definitely, obviously, it's not good to have a negative growth rate. Chipotle has the #1 spot at 26% for the next 5 years. For profitability, Chevron had a 21% gross profit margin and 15% net profit margin. Not good enough to get them onto either table. Adobe and Microsoft hold the #1 spots for profitability. And then in terms of stock performance over the last 5 years, Chevron is up about 25%. So that's not good enough to get them onto the table here. Tesla holds the #1 spot at 1,000% return over the last 5 years. So based on this, it looks like Chevron is not that competitive compared to the other companies we've looked at. They're currently not trading below intrinsic value per share according to the discounted cash flow model. And compared to the other energy companies in the industry, it looks like they're really sort of middling of the pack. ConocoPhillips has the highest profit margins and ExxonMobil has the highest dividend payout. So I'd love to know what you guys think of Chevron. Let me know in the comment section down below if you guys are holding on to any shares of Chevron at the moment. It looks like they're still figuring out what to do with all of that cash sitting on their balance sheet, so it'll be interesting to see what they do from here. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.